Hello, my name is Sergio Marrero, and today we are at Rebel One Live, where joining us is Jessica Lee. She's a VC at Soma Capital, venture capital fund that focuses on early stage ventures. So she's going to share more about the portfolio they have of over $35 billion in valuation, that portfolio and the mega startups that they've invested in. So excited for you to join us. She's also a Harvard graduate, a contributor, and she's also part of a startup that it was in YC batch S19 called Alpha. So and not to leave that out, but also director of content at Harvard in Tech. So thank you, Jessica, for joining us today.
Thank you so much for having me. I'm super excited.
Yeah, of course. So I wanted to dive in before we talk about breaking into VC and getting all of your insight for those trying to break into the industry of how to do that. Can you share a little bit more about Soma Capital?
Yes, definitely. So Soma Capital is a seed stage fund. We're sector agnostic and we're geography agnostic. We've been around for 5 years, founded in 2015. Our founder is Anil Ranadive, whose own background is that he built consumer startups as a serial entrepreneur for 10 years prior to founding Soma. And essentially with Soma, he wanted to join forces with his father, Vivek Ranadive, who's the founder of Tibco Software. That's a very large enterprise software company that basically powers the backend infrastructure for lots of large enterprises, including at one point 90% of the Fortune 500 companies. So they essentially wanted to come together to be able to support the full spectrum of founders. So we have lots of unique value adds beyond the capital itself, including connections to enterprises through the Tibco network. Also, as a fun fact, Anil and Vivek together own the Sacramento Kings NBA team. And so some unique value add on the sports media entertainment connections front as well. And then we work closely with Vivek's fund called Bow Capital, that's our sister fund, to provide long-term capital for our companies and be able to be a partner for them along their full growth curve. And then we're also backed through Bow by the University of California Endowment, so we can be really helpful for our companies and connecting them to academia and connecting them to potential hires, graduating students from the different UC campuses. And then a little bit more operationally on our models. So our average check size is between 100 and a couple $100,000. So as a result, we don't lead rounds. We're a super low friction check. We don't have ownership targets or take board seats. So we are really founder first and work super collaboratively with other investors, both leads and non-leads in the syndicate. And that's a little bit about us.
Great. Thank you for sharing a little bit more of that. How did you first hear about Soma Capital?
Yeah, so actually a couple different avenues. So one was actually a headhunter had reached out to me over LinkedIn, but the more interesting or unusual one is that I had worked at Global Founders Capital when I was in college, which is the venture arm of Rocket Internet, which is this large German conglomerate publicly traded company. And my boss there, John Stalter, is really good friends as well as co-investors with my current boss and the founder of Soma, Anil, and so had sort of seen Anil's name and Soma kind of in different co-investor charts we were tracking or just other deals we were doing. And so I'd always kind of come across the fund, I guess, unofficially through that capacity as well, and sort of unofficially worked together with Soma even before joining. And so I'd heard different things about the fund through those avenues. Oh, thank you,
And
Ryan.
can you share a little bit more about, I know you mentioned the size of investments. How big is the fund and how many investments do you usually make over the year?
Yeah, so we're a super high velocity fund. Our first two funds, the first one was 10 million and the second one was 50 million. And so we write smaller checks, so we're able to make more investment. And then we do follow on in many of our portfolio companies over time. And so we actually have this sort of unique model of indexing to Y Combinator. So we invest in around 10 to 15% of each batch of YC. And part of that reason is just to scale ourselves. So I'm actually the first full-time hire on the Soma team. We've been around for 5 years. And so, as you can imagine, for the better half of that, well over 4 years, it was just my boss and some interns, perhaps, or friends helping, but it was really just him focused full time on the fund. And so, it was a way for him to scale himself and get curated, diverse, predictable deal flow without having a team of analysts, associates, principals. And so, we end up investing in around 30 companies every Y Combinator batch. And so it comes out to around 60 total with 2 batches per year. But then we also invest a lot outside of YC as well, just less outbound, just because we don't have the capacity as a very small team still. And it's more kind of inbound referrals from investor friends or founder friends or angels, other people in our network that we're always trying to broaden.
Yeah, and I know you're YC focused, but is there any industry theme there, or is there a certain type of startup in terms of characteristic that you're looking for as you're investing?
Yeah, great question. So we're super team first in our evaluation. I think a lot of times other seed stage investors or other investors in general in the early stage get very caught up in the details of the traction and particular metrics or very specific aspects of the product, which is all fine and good. And we definitely do dive deep into traction, market metrics, KPIs of all kinds, and the product itself. But I think in the seed stage, what we found over time in our portfolio, as well as in the broader startup world in general, is that the product and subsequently the market will, and in many cases should, pivot over time, frequently multiple times, into something that's perhaps similar in a similar market, but ultimately quite different. And so, what the only thing that really does stay constant is that founder or founding team. And so we like to focus on a very team first approach and get to know the team over time. I think YC, through YC, we're very fortunate to be able to have most, if not all of the batch, or even more if we continue conversations after demo day, to get to know the founders and start to build really friendly, really value add relationships with them from the start of the batch so we can get to know them and how they think, how they work together, how they complement each other, who they are as entrepreneurs, as risk takers, as leaders, that founder market fit, their passion, what sort of drives them, whether they're able to grow with the company and put the company before themselves in a constructive way. And so all these things we're able to figure out, obviously not, asking them point blank, but, just through interacting with them, seeing how they solve problems, seeing how they think. And even in our conversations, they're much less about, is this number 64, is it 63? Because we understand while data is important as a data point, but it's very much not predictive, sometimes even anti-predictive in the early stage. So we really focus on the core of the people. And I think that makes the job a lot more interesting and fun as well.
And how do you, so do you invest pre-product, pre-revenue?
A little bit more rarely, I'd say, especially kind of these days when there's more uncertainty. But we have in the past. I think that it is a little bit tricky, and I think it obviously is biased in favor of founders who are serial entrepreneurs, or were like the first engineering hire or first whatever at some company that later became very big, like a Carta or a Box or a Tucker, et cetera. So I think there is a lot of bias. It may be inevitable, but some bias there towards founders with previous exits. So I think those are kind of the main cases in which we'd be able to do that. Obviously, it's not kind of a super special formula for understanding the founder in terms of looking at their prior exits, but I think that's kind of one of the main cases in which we've invested so early on. But usually, even if they have pilots or a wait list or some kind of product, even not in its final form, but a beta or alpha beta version, that sort of helps us get more comfortable around everything as well.
And looking at the startups that you've invested in, I know that you mentioned you've invested in high tech products, sometimes biotech. Can you talk more about how do you evaluate those startups? Because they're usually pre-revenue when you're investing. What tips you over the edge, or what how do you gain confidence that that's a great investment?
Yeah, that's a great question. And I think actually it's super close to my heart as well, because the main reason, or one of the main reasons that I got into venture, became interested, I actually started my venture career in Boston and Cambridge, Massachusetts specifically, which, as many of you probably know, is a big biotech hub. And there's lots of, so into Harvard, and there's obviously lots of research and innovation on campus there and right across the river at MIT and many of the other large, amazing research institutions in the area. And so the main, or one of the main reasons why I first got interested in venture was just being in the room with these incredibly brilliant, visionary, non-risk averse, daring founders who were super focused on changing the world, specifically through biotech, or biotech-driven innovations. But then they needed help, and I could actually help them, or not just myself, but the rest of my team and my network were able to help them in tangible, commercial, business-oriented ways. And so super close to my heart. And so in terms of kind of how we think about evaluating these companies to start, I think sort of recognizing our blind spots as well, because my background is definitely not in biotech. I do wish it were, but it's unfortunately not at the moment. And the rest of our team, while brilliant, also doesn't really nobody has a PhD in biology or anything along those lines. And so it's helpful to kind of have a network of advisors, including the University of California professors. I know they're closer, a little bit closer to our sister fund, Bow Capital, and also Bow Capital ends up writing larger checks because they are later stage focused and they have led rounds in the past. And so Bow Capital, for example, have connected with their advisors and mentors and other people they're friendly with in the University of California ecosystem to help diligence more deep tech, more biotech investments. And so sometimes we're able to leverage that network or similar networks to even just Bow as they're sort of gaining knowledge over time as well through kind of these secondhand conversations with the University of California leadership and professors and thought leaders in various fields. And so kind of leveraging a network of advisors that's built up over time is super helpful. And then also I think it is sort of like a chicken and the egg kind of cold start problem. But I think where I entered, at least, so from my perspective, we obviously already have a lot of really great biotech companies that we invested in before I joined, but they've been incredible founders, in their own companies, but also super helpful for us as well. Sometimes we won't know as much about a particular space, so we'll send over, just a quick note and say, have you heard of this company? What are your broader thoughts? And if they, we obviously won't just totally listen to what they say, but I think if they voice some really valid concerns that we probably had no idea about or wouldn't have thought about otherwise, then that's sort of a orange flag at least to dive deeper on. But then if they say, this sort of checks out, at the high level or seems promising, then we'll dive deeper as well. So I think kind of leveraging a broader network, whether it's through your LP base or through other investors who are more biotech oriented or through your founders is super helpful. And then I think kind of to that end, in terms of framing those conversations with, again, advisors, investors, founders, it's really important to recognize your own blind spots and know that, sometimes if you don't come from a particular background, that's, totally fine, but it's important to, kind of focus on where you might need supplementary information and be able to find the best people across those various buckets to be able to provide that.
Great. Yep. Getting that subject matter expertise to help you in the process. So yeah. Can you share, doubling back, you started to touch on your journey. Can you share a little bit with us some of the things you did to hack your way into venture capital? And I know you're, a content contributor. You lead in Harvard and Tech. Can you share your journey to Soma?
Yeah, definitely. So I started off my initial sort of experience in business, I guess you could say, was really in the public markets. So I had invested on my own throughout high school and throughout college, and still now, mostly from the encouragement, or initially from the encouragement of my parents. My dad, or my parents both, are immigrants from China. And so financial empowerment was and still is something that's super important to them and something that they really hammered home when I was young as well, and sort of stuck with me. And so kind of following from that idea, my dad always wanted us to be in control of our own wealth, us as in me and my little brother, who's a junior in high school. And so that was something that was super top of mind for me all the time growing up, still now as well. And so that's kind of what first got me started in investing. Obviously, it took time with some mistakes along the way, certainly, but really enjoyed the process of triangulating between different data sources to paint the picture of a company and an industry, historically, as well as, in the future, forward looking as well. And so really enjoyed that process. But then when I got to college, I felt like I wanted to get more hands-on experience with these companies. And so spent a little bit of time as an operator, obviously during school, with a couple of different companies, including Morning Brew in the media tech space and Lux, which is acquired by Volvo in the transportation tech space, sort of different areas. With Morning Brew, it was more growth and marketing oriented. With Lux, it was more operations oriented. And so really enjoyed both those experiences, but so early on in my career wanted kind of more diverse exposure to different sectors and different stage companies, different types of, leaders, et cetera. And so started to think more about investment banking, which is sort of all the rage these days on campus as well. And so there was a little bit of herd mentality or peer pressure, if you will, there. And so spent a summer in Morgan Stanley's technology investment banking group. It was actually a pretty active summer and got to see a lot of cool things, including a clean tech IPO, worked on Bloom Energy, and then also Sonos in the consumer electronics space and Domo in the enterprise software space. And so was able to see lots of activity across different sectors, and really like the team, super hardworking people, and received a return offer to go back full time. But ultimately felt like the industry, not, the company per se, but just the industry as a whole, and the structure of investment banking was a little bit too deal oriented for me. And I was looking for something with more of a long-term, capital-based, incentive-aligned partnership with the founders and the companies I was working with. And oh, sorry, you're on mute, I
Oh no,
think.
it's good. You wanted more skin in the game.
Exactly, exactly. Yes. So capital-based incentive alignment. And so had sort of had some warm leads, if you will, with different groups on campus, or different groups kind of touching campus, not necessarily on campus. But for example, had met Peter Boyce, who's the founder of Rough Draft and also Harvard alum, obviously many years older than myself, but he's super connected to the community still and just a super kind person in terms of helping undergraduates and just other people interested in ventures, startups, or tech in general. And so had gotten in touch with him, I think, even way back in my freshman year of college. And so sort of kept that relationship alive over time, going to different events, staying in touch over email, meeting every so often, and things like that. And so sort of had that kind of warm lead and started actually a program with Rough Draft, not officially as a fellow at first, but basically this idea I had of, everything but the idea. So basically realizing that lots of people have what it takes to be a founder. And I think that's actually much harder to get than the idea itself. And obviously, as we discussed, the idea can certainly evolve and probably should evolve over time, but it's really kind of the person who makes or breaks the company. And so wanting to find these founders on campus in the theme or in the spirit of early stage ideas, wanting to find these founders even before they had found their idea, and helping them or convince them or support them in making the jump to entrepreneurship and not having like the lack of idea be the reason they don't pursue it. And so basically started a series of programs for them. And then when Rough Draft was looking for a Harvard partner, I was pretty top of mind, I think, as a result. And so I was able to jump into that spot. And that was kind of my first break into venture officially. I think outside of, events or kind of more casual engagements, kind of my first official role there. And so that was kind of how I first got involved. And then I'd say for Soma, it was sort of accelerating beyond Rough Draft or looking at a little bit later stage, I think still definitely, early stage in the grand scheme of things, but working a little bit with Global Founders Fund that was more proper seed, whereas Rough Draft is more pre-seed. And then working with Romulus Capital, which is a little bit more Series A focused, a little bit more B2B, whereas Global Founders Capital is more sector agnostic. At the time, they were leaning a little bit more consumer. So getting different types of exposure across sectors and across stages and across geographies, and also operating versus the investment side. I had led Female Founders' National Fellows Program, which is more on the operating side, doing consumer behavior insights research to support their largely consumer-focused portfolio. And so that was very fun as well, and being able to experience a little bit or sometimes a lot of everything from all kinds of angles, and being able to decide where I sort of fit best, and also being able to hone my skills in all these ways. I think that's been super helpful for me at Soma, because Soma is a startup in many ways. I think it's a super cool blend of like having a really strong foundation, great portfolio, lots of funds raised, a lot of really great networks through TIPCO, through Sacramento Kings, through our sister fund, through the University of California, et cetera. But then still, being lean and being dynamic and being entrepreneurial, where I'm able to have, palpable impact on the fund, on our founders, on the ecosystem, and also have creative agency over my work. And so that's been super appealing to me. And I think kind of all those things coming together, since nowadays I'm very much involved a little bit or a lot, depending on time of year, in all aspects of running a venture fund. So kind of having the skills of being operator oriented as well as investor oriented, and thinking across sectors, thinking across stages within the early stage, thinking across geographies has been super helpful, especially given Soma's sort of broad mandate or broad focus in supporting founders across different sectors and industries and geographies.
And I know one of your focuses is elevating female founders. So one of the things that you did at Soma was creating Global Founders Network, over 100 female founders. Can you talk a little bit about what inspired that, and what why did you do it?
Yeah, definitely. So I think broadly what inspired it was there's this quote, I don't know who said it initially, but, and maybe I'm butchering it a little bit, but there's this sort of conception or idea that I think is partially true. Obviously, a lot of this is generalizations, but basically there's this quote that, women pitch businesses and men pitch unicorns. And I think the sort of explanation behind that is that women, as in female founders, especially in the early stage, obviously a lot of this changes if you're like already on your Series C, et cetera. But I think especially in the early stages, obviously where I focus, a lot of women kind of go into these pitch meetings having, not having as much confidence for various reasons, society, et cetera, circumstances, maybe the whole, partner meeting is largely men or all men. And so all these things sort of contribute. And so they go into these meetings with less confidence relative to their male counterparts. And so they feel like they need to be much more ready and armed, if you will, with data and facts and numbers and spreadsheets and financial models and like all the details on like which warehouse they're going to use and which trucking company they're going to use, which is all super important to actually implement your business, but obviously not the most exciting thing, as we can probably all agree on, not just VCs. And so men, in contrast, kind of go into these meetings, obviously in general, with a little bit more confidence or a lot more confidence. And so they're able to say, whatever on all these like near-term financials or implementation plans, I'm looking towards like the 10-year, 15-year, maybe 5-year if they're uber confident, exit or scenario. And let me just paint the picture of that for you. And that's obviously much easier to do, but also much more exciting for anybody, not just VCs, but maybe VCs in particular. And so I think as a result, VCs who love to think about vision and big ideas are, much more bought into and more convinced by, these male founders versus the female founders who are, talking all about their operating plan, which is again super crucial, but not the most exciting thing. And so kind of realizing that there was this structural gap, and obviously, I have very little idea how to change that from the ground up forever immediately, and I don't think there are any sort of easy answers. But I think what I realized would be great is to kind of create more of a community around women helping other women. And so what I had realized or been thinking about as well is that I'm creating all this content. So I work with Alpha, as we briefly mentioned before, which is this platform of, I think now we're 26,000 women in tech, venture, and startups from all around the world, all levels of seniority, and basically creating content there featuring many times interviewing women on the platform or off the platform who later come onto the platform because of the interview, and basically interviewing female investors, operators, and founders, and sharing their advice and their stories for other women aspiring founders or aspiring investors, or even current more junior investors, et cetera. And so have been doing these interviews, but then sort of realized that it was kind of just a snapshot in time where, I interviewed them. That was a really great experience. I wrote up the article. That was great. They read it. They loved it. I published it, but then it sort of ended there. And sometimes, on an ad hoc basis, I would have a question for one of them, or like they would have a question for me. And obviously, we'd engage at that point, but there really wasn't this ongoing way to engage with them or have them engage with each other, since so many times, there could be all kinds of ways in which they could collaborate or just like trade notes or like become friends that I couldn't even envision. And obviously it's kind of hard for me to broker all those different combinations of relationships, and I can certainly miss some or not think of some or create some that don't make sense. And so what I realized I could do was something that was super low friction for everybody. So it's not like, oh, you have to sign on to some kind of crazy, like 5 hours per week commitment, because obviously we're all quite busy. But basically just this quick form, fill out this 2-second Google form with what, your background is, what you're willing to help with, if you're willing to help. Obviously no hard feelings if you're not. Some people, just had a baby or like are launching their own business. So certainly understand people have competing priorities, but if you have, the interest, just fill out this super quick form. Then your name, not your email, so we don't share contact information, goes into this database. It's just a simple spreadsheet that not anybody can access, but female founders can request to access through filling out a separate Google form with more on their backgrounds. And so basically kind of creating a way for female founders to connect with and sort of have people help them demystify kind of what goes on in operating land or later stage founding land or investor world. And then also kind of having the different mentors to connect or be able to connect with each other. So sharing the broader mentor database, not just with founders, but also with other mentors. And now we have like 160 or so people. And so it's been really great to see, the network grow and just see how willing people are to help each other. So it's been really inspirational.
That's great. It's like the power in that network and some of the work that needs to be done.
Yeah.
If we're gonna shift gears, can you share a little bit more about I know we had spoke previously about how you you bring this extensive network, but for those that are starting out in the field, they're passionate about underrepresented or talk about female founders, and or let's say they've started a fund and want to make sure they diversify their deal flow. What are things you do to help Soma make sure they have a broad array and diversity in their founder base?
Yeah, definitely. So I think what's super important is focusing on that top of funnel and making sure that your sourcing channel. Sometimes people are like, oh, am I actually discriminating like in the first meeting or in the partner meeting or in like how I support portfolio companies? And obviously all those steps are super important as well. But I think so many times if you really kind of take a step back and think about and even like map out, however you would like the flows of people as in founders kind of through the VC process. A lot of times there is, drop off or selective bias drop offs in the middle. But I think what is really hard, as you alluded to, is like really getting your foot into the door, even getting that initial meeting or initial outreach. And so I think a couple of things have been pretty important to me. And just to kind of caveat this, we do have sort of a little bit of a different model with sort of indexing to YC and also kind of having more inbounds than not. And also we're a low friction check. And so other investors are more inclined to work with us. I think it might be a little bit different in terms of sharing deal flow. If we were like really aggressive and had to take the whole round or something, obviously people probably wouldn't send things our way. But I think kind of being in this unique spot of being able to see YC as well as being able to see some of the deal flow that a lot of our friends who are investors or angels or founders who sometimes become angels as well are seeing has been super helpful. But I think a couple of key things are really important. So I think when I'm developing my own investor network, kind of making sure that's very balanced. I guess it's kind of a little bit easy for me since I'm also a woman. And so I end up kind of in these women in VC groups. And so I end up seeing lots of women. But I think also kind of being mindful of racial and ethnic diversity as well and making sure that when I'm reaching out to people, because I think sometimes how these things happen is you'll join a Slack channel and then they'll say, hi, I'm Jessica, blah, 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 here's me, here's Soma, here's my email address. And then people will reach out to me and then I'll also scroll up or say posted, after I post on like who else is sharing intros and reach out to people. Obviously, it's very hard to reach out to just about everybody and there's only so much time in the day to schedule calls. I think it's really important because you are being selective. Obviously it'd be different if you're just reaching out to everybody by default, but because you are being selective to make sure you catch yourself before you kind of implicitly bias or get biased towards like big name funds, because sometimes most of the people at the big name funds are also of a certain gender or a certain race. And so I think being really mindful that you're creating really diverse investor relationships is super critical, because sometimes, or many times at least in our case, those are the people that are sharing the inbounds with you. And I think also kind of making a point, so founders will also share deal flow with us regardless if they're investing. Obviously sometimes they'll become angels as their businesses kind of develop, but in the early days founders just kind of know founders. And so kind of starting to develop better relationships with female founders and with founders from diverse backgrounds so that so I can also help them more, which is really great, and help them raise their Series A rounds, et cetera, because that could also still be quite hard for them, kind of being from these diverse and disadvantaged backgrounds, minority backgrounds. And so developing better founder relationships to support them in later raises, but then they also sometimes might be part of, female founder communities that they can share more companies that are, founded by diverse people. So that's super helpful as well. And then I think also kind of as someone, I think a common question people have is like, okay, so that's great and all, but like, I'm not in a check writing capacity just yet. And obviously most people in VC aren't. And so that's obviously super common. And so I thought a lot about this myself, but I think, even though we're not, or I'm not, and many people aren't in check writing capacity. So you don't have the ultimate say on yes or no on a particular company, but I think you can still help the founders in so many different ways if you obviously have good rapport with them and you believe in them and you think they're a really great person and a really great founder, but just maybe you didn't have enough buy-in from your partnership, and maybe your partnership is mostly male or mostly of a particular background. And so I think what you can do to help is help the female founder demystify the fundraising process, explain term sheets to them, explain, what a pitch deck should look like, share examples if it's not confidential, give feedback on the deck, help them practice their pitch, with that whole kind of going back to the initial point of, women build businesses or women pitch businesses and men pitch unicorns, kind of with that in mind, or, other kind of, different things you might know about differences people have in pitching based on their backgrounds or based on kind of biases investors might have. And so help them in any ways they can, or in any ways you can, so that they can have better pitch meetings with people who might be in check writing capabilities, and also kind of develop a strong network of other investors that you can share deals to, not just ones who can share ones with you, but also like female focused funds. There's a lot more coming up these days, which is super cool. And so that's been pretty great as well. Oh, I think you're on mute.
No, thank you for sharing that, especially it's like diversifying pipelines into your venture. And then you spoke to an important piece, and you went over it, is for those that are at different funds, that you may have that inflow, but then you have to look at the process that you have inside your fund, because you may be selecting underrepresented founders out of the process just by the virtue of there being bias baked into the process. So it's definitely important as you're looking for opportunity, and again, you're looking for the best investments, and diversifying your deal flow. I wanted to shift a little bit into to the future. Actually, before we shift there, is covering the present and challenge of COVID, and we've focused extensively. I think we're all aware that startups, are having a tough time. But can you share a little bit of how startups have been creative or have been pivoting through these challenges that you've witnessed, that you think are particularly inspiring?
Yeah, so I'll share a few from our portfolio. So to give a few examples, so one of our portfolio companies, or I'll share quite a few actually. So one of our portfolio companies is called Gecko Robotics, and so they're a little bit later stage. I think they more recently raised their Series B, but basically what they usually do is these robotic inspections of power plants, and so that's kind of their core model. But they're kind of like at the intersection of hardware and software, and so that's kind of their bread and butter, and that's their expertise, and they have supply chains in place, et cetera. So they're really good with sort of the physical design of things, obviously powered by technology. And so basically what they've done during COVID, especially kind of in March and in April, when the hospitals were obviously very overloaded. I mean, many still are, but I think that was sort of the peak for many cities, at least in the US. And so they were able to create ventilator splitters and also create this like 3D design mold that they were outsourcing to or partnering with different actual manufacturers to produce in mass for different hospitals. So that was super exciting, obviously different from their core business, but it was sort of a really great way for them to use their skills and expertise and supply chain connections. Another example is BioBot. So they're actually a really great female founder team, two women from MIT. And so basically what they're usually doing is analyzing sewage to predict or sort of measure how affected a particular area is by the opioid crisis. And so obviously that's kind of their core model outside of COVID times, but during this time, they've basically been using their technology to measure the prevalence of COVID in a particular area. And I think they're still sort of iterating on how accurate that is, or like how they can pinpoint specific areas. But that was also a super unique way to think about, given testing kits are obviously in very short supply in most areas. And so that was sort of a way to obviously testing kits will probably give you the ultimate best kind of most precise number, but sort of their approach is sort of a little bit higher level, but still super valuable data. And then another company called Hype and Vice, they're basically building a fanatics for women. So they're basically creating, like, for example, game day gear for women at big like Berkeley or like or Arizona State or the Big Ten, et cetera, schools with a big sports presence and a big sports culture, but obviously sports games are not happening, and definitely people are not crowding into arenas, schools not happening, et cetera. And so what they've been doing is using their manufacturing lines and relationships to create masks instead, which has been super interesting and super impactful. So that's been super great. And then a final one I'll share. So I tried to sort of pick different ones across the board, but one of our companies, Nokia is basically, in usual times, they're basically kind of helping stores move to autonomous checkout, but then they're using that technology to basically do contact tracing for warehouses, and so kind of helping to eliminate as much as possible, contamination or being able to see where people who later are found out to have COVID have touched, so that people can go into quarantine accordingly and really stop or prevent at least the spread of the disease in these facilities. And so that's kind of a few really inspirational, things that I've seen where startups have, I think it's a good balance where they like still have their core business model that's obviously sound and makes sense. And, they have all the relationships that keep executing there, but then they've sort of taken the opportunity, even though they're, obviously no doubt going through many challenges as well, just like the rest of us, but probably more given their founders, but then, still taking the opportunity to make a really great impact on society with the resources that they do have. So it's been super inspiring and amazing to see.
Yeah, that's powerful, especially moving. It's like where some see challenge, others see opportunity. So that's
Yeah,
excellent. Speaking
exactly.
of opportunity, can you share a little bit, looking beyond, and again into the future? What areas are you excited about? What trends are you looking at, particularly as you move forward with Soma?
Yeah, definitely. So a few different, I think so many times, like we've all been so caught up with keywords like remote work or telehealth or delivery. And obviously those things are super valid and clearly super important. But I think right now in the seed stage, at least, there's a lot of, I wouldn't say it's like overpriced, but I would say there's a lot of noise. And so it's really hard to determine, not just for investors, but also for founders themselves and for team members, potential hires, everybody across the ecosystem. It's just right now in the short term, really hard to determine kind of which models are viable, which technologies are needed. And so I think everybody's kind of, a little bit misguided or not fully guided right now. And so I've been looking more at like, okay, so we know telehealth is going to be big. That's kind of for sure, more or less, or, it won't probably be everything, but it'll definitely be bigger than before. So assuming that that's the case, but not kind of assuming that any particular company will win, but kind of assuming more broader trends that we can be sure of. So obviously, we can be much more sure of telehealth than any particular like up and coming telehealth company, then looking at kind of what are second order trends. So for example, with the telehealth example, it'll be things like how do you make different data sources talk to each other better so that doctors can have full information on patients and provide really precise, really customized care really efficiently. And, EHRs, electronic health records, have been notoriously non-user friendly, and not that APIs would solve it entirely, but it definitely would kind of make a positive impact. And so kind of thinking about how APIs can disrupt these what we've come to stress test and realize as a result pretty antiquated, pretty stagnant industry. So kind of looking more at second and third order trends that are less saturated, both in terms of businesses being founded as well as investor attention. And then on the remote work side, so sort of same idea, definitely, more remote work now and in the future than ever, but not kind of putting a stake in the ground on like, this is, the remote work company. Maybe it's clearer, obviously, when it's like a Notion or somebody who's much later stage, but in the early stages, obviously not super clear immediately who's going to be a winner. Otherwise, we'd all be seed stage investors. And so kind of not putting a stake in the ground on like, this is the winning, seed stage remote work company, but just sort of assuming, and I think it's probably valid to assume that remote work is probably going to be the future, but then looking at second and third order trends from that. So for example, now that we're spending so much time at home, since we're not going to work, will sort of like IoT and will smart home sort of take off because we want more synchronous experiences, and we want to be able to, instead of just spend, the hours of 7 a.m. to 8 a.m. and then, 6 p.m. to 9 p.m. every single night, the same exact times, you kind of want more connectivity in between our rooms. So we're going from room to room all the time in sort of a spontaneous order. And we're also spending, we're really being immersed in our homes for better or worse. And so kind of finding technology to really reflect that type of behavior. And then also I think because, we have obviously Zoom and we have Slack, these point solutions for remote work, but then how do we think about the higher order but still really important needs around culture, and how do you kind of preserve like the water cooler talk, if you will. And so kind of thinking more about remote work trends that aren't super tapped into but are still relevant to kind of the core trend. Then I think the third piece as well is kind of thinking about, I think what's been really interesting is we've seen that all these sort of sector names that we've put on to different spaces as investors or as founders or as people don't actually make that much sense, because we've seen people move from restaurant workers to Amazon workers, Uber drivers also becoming Amazon workers, and we've seen people who work at startups join large tech companies, or large tech companies join startups, depending on hiring needs. And then obviously kind of in some of the examples I even gave, we've seen people who were initially making, fanatics for women or for, luxury things, pivot to making masks. And then we've seen car manufacturers or Gecko Robotics in the case of our portfolio pivot to making ventilators or ventilator splitters respectively. And so we're seeing that there's actually so much kind of like cross sector collaboration, or not even collaboration, because I think collaboration implies there needs to be like a formal partnership and like a thought process and an open channel, but I feel like the channels are already open. And so I think kind of thinking more about cross-sector fluidity and different technologies or different platform solutions that would better be able to enable that. I think that's super interesting. And then I think another thing too is, obviously we've been buying things online since forever, but I think there's still the two biggest categories of spending that we have in the world, which is housing and transportation. You've seen like TikTok, for example, which is obviously a social app that's very much used for social purposes, but it's been even used as a showroom for cars. And so how are we using kind of social technologies that initially kind of start off with a social use case and then move into more commerce and more monetary focused, kind of use cases especially in the largest categories of spending, which is obviously an area where companies can unlock tons of value. And then I think a final thing I'll say here as well is that you've seen that there's a lot of startups. It's obviously much harder for large companies to pivot, with a few exceptions, but in general, that's kind of the trade-off you make as you become a larger company. And now that everything has suddenly moved online with like literally no warning, people, like companies, people, individuals, groups, families, et cetera, are looking for all kinds of tools that might have not existed before and might not even be able to be serviced by all the ones they've heard of, like Zoom and Slack. And so I think startups are in a really good position to be able to pivot their product and pivot their offering to service these needs. But then at the same time, nobody could have predicted COVID. And so they had no idea that they were going to see this uptick in demand and need that they obviously want to capture from like a customer growth and revenue, et cetera, basis, but then they might not have like the customer support or the infrastructure or the security to be able to service super large contracts just yet. It's not just a matter of like, having conversations with a couple different people at different companies. It's very much, you have to have a product that's able to service that demand. Even in enterprise, it's super difficult. And so kind of thinking about tools that help startups become enterprise ready, not just in the sales motion, which is, obviously helped by the tailwinds in demand, but also in the product and in the back end and in the less exciting but still super important kind of back end or back office functions.
No, I love how you spoke to not only the first order trends but the second order, right? In each one of those cases, because it's obvious that we're gonna have more digital, streaming like a Zoom, but less obvious that that there'll be a replacement to the serendipitous communication that we need and crave, and it's part of our like how we function.
Yeah.
And then rethinking the home, right? If you're not moving around or you're moving around the home, what does it look like? And then, an enterprise. So, um, thank you again. So we're gonna thank you very much, Jessica. There's a Jessica Lee from Soma Capital joining us today. So for all of you watching, this is Rebel One Live, where we're highlighting investors and founders backing amazing innovation in the space. So thank you, Jessica, for joining us.
Thank you so much for having me. I really appreciate it.
Awesome. So for those watching, join us every Tuesday through Thursday at 7 p.m. Eastern.